All right. Hello, everybody. Welcome back to another episode of The Market Close. Today is going to be an important market close because after the bell, we've got Micron. Now, Micron, we're going to talk about why it's so important and what it means in the context of Nvidia and the broader market. But we're going to have their numbers, I think, by 4 o'clock or 4:05, and then 4:30, we will actually be listening to the call and seeing what they have to say. So got a lot to talk about today. This is going to be one of the last big earnings. We had FedEx yesterday. That was important. Rivian, obviously we saw what happened with Rivian. Micron, I think, caps off pretty much everything. We have Nike tomorrow, but Micron is one of the most important names in the semiconductor space. Now, to get started on the show today, the biggest name that we have to discuss, the biggest thing that has happened today, and we saw this breaking out in the morning, but I think it got to 188, 189. It was okay. Now we're at 193.76. We hit a top of 194.41. Ladies and gentlemen, Amazon is breaking out. Amazon. The reason I'm taking pauses in Amazon 3 times is because Amazon has tried to break 190 3 times over the past 5 months, and it has not been able to break that 190 level. Today, it breaks through from 193. Now, why does it break from 193? Well, there's 2 reasons. One I found out 3 hours ago. One I found out 20 minutes ago. And the one I found out 20 minutes ago actually is way more surprising to me about Amazon. Someone said I'm turning gay just listening to you. Oh my God. We'll talk about Nvidia shareholder meeting as well. That was important, along with Robinhood shareholder meeting that happened earlier today. So Bank of America upgrade to 220. Let's read a little bit off this price target and see what they said. Also, Tesla's up 5%. We will also talk about Tesla in just a little bit. So first of all, logistics efficiency improvements. Amazon has built a logistics powerhouse. We project over 9 billion packages to be delivered globally this year. Amazon could be one of the largest US shippers ahead of UPS. Delivery speed is also dramatically improved, with nearly 25% of estimated units now delivered same or next day. I had my new Beats headphones a couple weeks ago delivered, I think, on the same day. I ordered it in the morning and I got it by the afternoon. So, the delivery is just incredible. However, despite significant efficiency improvement in 2023, all 5 logistics utilization metrics that we track, such as units per square foot, remain below 2018 levels, suggesting more runway ahead for efficiency gains from here. In this report, we provide an update on key logistic efficiency metrics, which ultimately links to higher operating margins, which is the important thing. So they highlight 6 different levers of retail efficiency, which increases those margins, which are the highest they've ever been, from 10% or to 10% versus 8% back in 2021. Number 1, inbound cross docks and new consolidation centers. Number 2, efforts to improve inventory network distribution. 3, higher share of units on the same day sites. 4th, robotics integration, expanding into fulfillment centers. Potentially, maybe Optimus is one of the Amazon is one of the clients for Optimus. That's probably years from now, but that could be one of the things that helps Amazon as well. Square footage growth deaccelerating below unit growth, and then traction for 3P shipping services and supply chain by Amazon. Their final note is that street retail margins still look conservative, and as a result of that, they see a lot of upside, at least on the margins. And the margins are everything for Amazon, because the reason the street usually has given Amazon sort of a bad rap is because they make so much money, but they don't have any margins on it. If those margins increase, then that's going to be incredible for Amazon. So there you go. Amazon right here at 193.46. Now, what's also interesting, besides just Amazon here at 193, is another piece of news that they announced 20 minutes ago that came out from Bloomberg. Does anyone shop with Temu, that like Chinese malware e-commerce company? Maybe malware is a little intense, but you guys know what I mean. Amazon said we're competing with Temu. Amazon is launching a platform that can deliver products directly from China, which is what Temu does, from the Amazon website. The Seattle-based company's plans, described in slides posted to the websites for third-party Chinese sellers, show Amazon shipping goods directly to customers from China. And this broke at 2:52 p.m. today. So I think the Temu news, which is, probably just good in terms of being able to not only increase their margins, but take away some of the competition from the Temu and Sheins of the world. Shein, I think, is valued at like $60 billion. Temu is probably getting up there. They're 2 of the most downloaded apps on the App Store and shopping in the United States. So Americans really don't care about Chinese apps. They just care about cheap stuff. And Temu has the cheapest stuff on the planet. Yeah, Temu is number 1 on the App Store with shopping. Look at that. Number 1 on the App Store. And number 2 is Shein. And number 3 is Amazon. 1, 2, and 3. An American company is behind number 1 and 2, which is Temu and Shein. we would rather, as Americans, get our shit from China because it's cheaper than pay for a little bit extra for 2-day shipping for Amazon. So if Amazon can curb that, they don't have to get the entire market. If they get a little bit of the market, yeah, there you go, 193 on Amazon. And it's going to be pretty exciting to see how the street ultimately reacts to that. So that was the big Amazon news today. Let me know in the chat if you're long. If you are long on this company, congratulations. This is just a great day for Amazon, and hopefully it's starting to break out of that 190 level, which will get the street more excited. Robinhood 2240. Robinhood had their shareholder meeting. Nothing new that was said other than Vlad saying, "Hey, we'll probably do some buybacks, or we can initiate buybacks, potentially some AI plans." On a question that was asked about any integrations of AI, I'm sure they're already using it internally in the company. And then the gold credit card is beginning to roll out, so he said that's going to be rolling out later throughout the year. It got smacked at 2314, and a lot of people are wondering why to get smacked if it got such a good upgrade, like what's going on. I honestly think that there was someone either selling. I would not be surprised at all, not one bit, if we get an insider SEC Form 4 today and someone sold at that 2333 level, or if Kathy Wood dumped a bunch of shares. Now, granted, the market did take a little bit of a turn when Robinhood was at 23. S&P fell, Nvidia fell, and Robinhood kind of goes with the market. So that could also be a reason. But I think we probably got some selling right here. And that 22.2 level we bottomed at, and then we got back here to 23.39. The big thing about Robinhood is not about the price action. The price action is irrelevant, in my opinion. The question is, does the street see the bull case? And the price target upgrade we got today, along with Bank of America's price target upgrade to $24 a month ago, that means the street understands the potential. They're on board. And now when they put up the numbers, which they have to execute, but if they can execute and put up the numbers, because the street's price target's already there, it's not like going to be a surprise. It's going to be, oh yeah, of course, we thought they were going to do this. They're doing this. Let's buy the stock. And then you probably see some momentum there, even if you don't have any short-term momentum. So that's what we got in the context of Robinhood. Also, one quick fact, I was talking about this a little bit in the morning, the $22 strike for January 2026, apparently 3,000 calls were open yesterday. Today it's 22,000. So whoever, and yesterday was when most people did the buying, or like most of the calls were bought. So I mean, I don't know if they knew a Wolf Research price target upgrade was coming today, but yesterday someone did a lot of buying on those $22 calls for January 2026. And that also led to some more momentum for Robinhood. FedEx, 15% on the day. Absolutely incredible. Shopify, 65.39. S&P at 545. S&P is green. Apple got upgraded at 213. We'll talk about them in a bit. Snowflake had a nice little bounce today. Obviously, it was getting a bit oversold at 123. Now at 128, up almost 4%. Tesla, wow. Tesla's trying to go to 197. Tesla's trying to go to 197. That's incredible. So what is the news on Tesla? The news on Tesla was the integration, or the initiation by Stifel on a price target of 265, which is not like the biggest news in the world, but it was nice to see another Wall Street firm finally get a bit more excited about what Tesla's doing, because it got a ton of downgrades over the past 2 months. And so that initiation on the price target was actually very good. Here's what the analyst said. We believe Tesla is well positioned for robust multi-year growth from 2025 to 2027. In the near term, the revamped Model 3 and upcoming Model Y refresh should bolster sales, followed by strong demand for the next generation Model 2. They also said Tesla's AI-based self-driving FSD initiative could significantly add value. Longer-term robotaxi initiatives will be good. And then noteworthy near-term risks include delivery levels, near-term EV adoption, and the U.S. election. We are initiating coverage with a buy rating and a 265 price target. So that got the street excited, up 5.25% of the day. Look at that, right through 197. So there you go. Is at 196.88 now at 197.22. We are a couple bucks away from that 200 level, which is definitely going to be psychological for Tesla. But if you can get through that, I think that's going to be good. SoFi turning green as we get closer to the bell. SoFi was red the majority of the day. Now SoFi turning green. So that's nice to see on SoFi. Faraday Future as well, up 71%. Not sure why it's up that much. At one point, it was up 120%, but that one's up today. And then Tesla here at 197. Tesla basically added $30 billion in market cap today. Amazon added $80 billion, and Amazon is now a $2 trillion company. Tesla at about $630 billion. Tesla's now only down 20% year to date. It was down 43% in April. Amazon is up 28% on the day. Can you do a poll on Micron? Yeah, let's do that. So let's see. So Micron, we got in about 6 minutes. That's going to be very, very important. Micron is going to be what we see with that poll. Let me actually give you guys the bear case. Let's pull up a bear case video because I want people to see what the bear case is. Now, we talked about in the morning, Micron creates memory storage. Memory storage is important for GPUs. I think personally the earnings should be fine because I think they're just getting started. But there is a argument that it's too cyclical. And because it's too cyclical, that might actually end up hurting Micron. I don't know if this is the earnings where we see that cyclicality. I actually think we see some momentum this earnings, but let's see what they have to say, and then I'll pull up the poll as well.
Get the AI adjacency. I get the dynamic with HBM, and they certainly have a product. And in terms of the revenue growth, off of some cyclical lows in 23, part of this is a company that was the ultimate cyclical semiconductor and in a commoditized DRAM and NAND environment. So 23 to 24, either way, was getting better. Inventory levels are a lot better, but the excitement around HBM is part of where I get it. But I also understand where I don't think they're going to stand alone like Nvidia does on the AI chip side. I think in memory, there is competition. I think this move in the stock, it's 65 to 70% year to date. It's 225% off of the beginning of 23 when you couldn't get arrested with this stock. So to me, if there is any kind of euphoria or hyperbolic move in AI and AI adjacency, this is the top of the list. So they're going to have to crush it, and they're going to have to really guide. And I understand that the company, look, they're marketing HBM as the complement to AI, a must-have dynamic. I don't think they're the only ones in the space.
All right. Micron CEO Sanjay Mehrotra, by the way, will sit down with Jim Cramer tomorrow for an exclusive.
So again, it's not like the bear case doesn't make any sense, but I don't know if this is the quarter where you see a slowdown in Micron, given what we saw from them on the last quarter. There's a reason they ramped up. And then also what we're seeing with Nvidia. Now, Nvidia right here, look at those green candles. Nvidia bottomed 122.86 right back to 126. Absolutely incredible. Nvidia's been in a range today after the shareholder meeting, but people continue to buy the dip. They continue to buy the dip on Nvidia. We got 65% of you saying Micron moons, 35% saying that it dumps. I think they have a beat and raise. And if they have a beat and raise, again, I'm not the most familiar with their business, just judging on last quarter. I don't think the demand is slowing down. And if it's not a beat and raise, probably helps Nvidia. Nvidia goes green. Look at that. Red for the majority of the day, right back to green on Nvidia. Now, one thing Jensen Huang said today, the Blackwell architecture platform will likely be the most successful product in our history and the entire history of computers. Hell of a statement from Jensen Huang. I mean, that's not something you say, if you don't really believe in it, and he's obviously executed pretty aggressively against his statements. So Jensen saying that if they can put up the numbers to show that Blackwell is going to be the key architecture for computing, I mean, people are going to keep buying this thing now here at $126 on the day. Honest is up 11%. Okay. I don't know what news happened with Honest, but there you go. Honest is up 11%. I think Grindr had some news today as well. Yeah, Grindr is up 15%. Let me get the news on Grindr. I have no personal experience with Grindr, even though everyone's about to make that joke. Grindr, they put out something today. Let me see. I saw one headline. Grindr, for those that don't know, is a application where happy people can go and date each other. Where is the headline? Let's see if I can find it. Grindr. We got the market close in 2 minutes. Yeah, Grindr projects annual revenue growth of 20 to 25% through 2027, raising its 2024 revenue growth outlook from 25 to 23%. Okay. The company plans to enhance its platform with new features as more users seek long-term relationships. Okay. So there you go. That's why Grindr's up. And if you bet on Grindr, then you're up 15% on the day. Thank you for clarification. Barry says Amit's acting like he's not an analyst for Grindr. I'm an ambassador for Grindr. What are you talking about? Not an analyst. Okay, so Amazon 193, Nvidia 126. Wow, Nvidia. Green on Nvidia. We got the market close in 1 minute. I don't know if Micron literally comes right after the bell. So we'll see. All eyes on Micron. I have everything I need to have that's pulled up to make sure I can access it. It might be like 5 minutes late. I think Micron comes immediately after the bell. And then at 4:30, we have their call. So we should be able to access the call at 4:30. And so this is the big one to see. This is the big one to see for Micron. Micron. Okay, 30 seconds left. This is a big one, guys. I mean, if Micron crushes, Nvidia is going to have some fun, dude. If Micron's a signal for what Nvidia is going to do in Q2, because on the shareholder meeting, they really didn't project anything for Q2. So I think the street just is trying to find more data points to figure out how big can Nvidia crush it in Q2. And so if Micron crushes, maybe that's a signal for Nvidia and their Q2 earnings. All right, here we go. It is Wednesday, June 26th, 4 p.m. Thank you, everybody, for being here. The stock market is now closed. All right, market's closed. Here we go. It's time for Micron. It's time for Micron. This is the one that matters. I've got my refresh here. By the way, Rivian calls, if you bought like $12 calls or $13 calls, they were up 1,200%, 800% today. So Rivian calls, that they have to expire today, not tomorrow. Oh, do we have a green candle? They have to expire on Friday, not like in the future. Little bit of a green candle. So those Rivian calls did well for people that have those. All right, let's see. This is the one. It went from green to red. Now it's barely green again. I'm refreshing. I don't have the numbers. No numbers yet. Again, because the call's at 4:30, I'm pretty sure we're going to get the numbers quick. I don't think it's going to take to like 4:10 or something. On their website, we don't have any news. Latest news. Yeah, not out yet. No news. Oh, are we green? Are we green? Oh no, we're red. We're no. Oh boy. Fuck. Why is it so red? Damn it. Down 5%, down 7%. Come on, bro. What the oh my God. Oh, dude, it's down 9%. You know what this reminds me of? This reminds me of Dell. I think they might end up saying some shit like Dell, which is that their margins might not be that good. Holy crap, dude. Granted, the stock was up 72% year to date. So, I mean, if you bought it knowing that it was up this much, now it's down 10%. You had to remember, I keep scrolling down because this stupid thing won't stop going red. It had a good year, so it's not crazy to see it go down. Where's Nvidia? Well, Nvidia's falling. Nvidia's down 1%. Damn it. Robinhood's red. S&P is red. Of course, everything's red. Why not? Because freaking Micron Technologies. Fucking Micron down 7%. Goodness. All right, what's the numbers? Let's try to get the numbers. Oh my God, was it that bad? Okay, so Micron adjusted revenue $6.8 billion. That beat estimates of 6.6. They beat on revenue. EPS 62 cents. They beat on EPS. Why is it down? They probably didn't raise. They beat on revenue and EPS pretty. I mean, the street was expecting 46 cents. They beat by 20 fucking cents. Why are they? It's down 8%. Why? Cash flow from operations, 2.48 billion. R&D expenses, 850 million. It must be the guidance. It has to be. There's no reason. I'm trying to find the guidance, trying to find it. I have it on CNBC. Let me pull it up. I have it on CNBC. Oh boy. All right, here we go. Let's see what they have to say. Wait, before I get there though, let me try to see where is the guidance number would be really telling. Where is the guide? Oh, guidance is light. Yeah. Guidance is light. Guidance seems light. I don't have the exact numbers, but it looks like guidance is light. Again, EPS 62 cents versus 53, revenue 6.8 versus 6.6. Really good numbers. Those are not. Let me go back to the stock real quick. It has to be light guidance. Yeah. Still down. Damn. Still down 7. Okay. So it's not down 10% anymore. There are dip buyers coming in. Guidance of $7.4 billion for next quarter. This quarter was $6.8 billion. I guess the street didn't like that. I think the street wanted like 7.9 or something. That seems like what the street wanted. Oh my God. All right. That is crushing earnings. I agree. That is. All right. Let's get some coverage.
Plays long-term hold in the discretionary space. Absolutely. I think this is
a moment. In the meantime, Charlie, yes, Micron, the expectations are very high going into this print. So we'll see what those results look like. But other parts of the market perhaps have.
This is a trade
near record levels, but the stocks underneath have been moving around a bit as well. What happens when we get the latest inflation read a little later this week?
Okay, they're not really talking about Micron too much. Let me pull up some other stuff. Is semiconductors done this year? No, I don't think semiconductor. I mean, dude, they beat earnings by a pretty wide margin. I mean, that's not, remember, this company was not profitable 2 quarters ago. They literally, I don't know the exact numbers. I think they put up like what, 900 million in profit this quarter. Pretty damn incredible at 62 cents a share. Let me pull up the company's website and see what they say. But still, the expectations were up there. The expectations were up there. It's going up. It's recovering a little bit. There's a green candle that's trying to get there. Why don't companies post the freaking results at the time, dude? Like, how is it not on the website? This is insane, dude. How is it not on the website? The last update was June 10th. Like, there's hundreds of billions of dollars on the line, and these companies don't put out the PR. Micron, yeah, it's still not out. That's annoying, man. Okay, so a little bit of a green candle trying. Nvidia is down 1%. S&P is down 0.03. It is recovering a little bit, or it's trying to recover a little bit. I think on the call, they're going to say, hey, we're crushing it, even if our guidance isn't exceptional. And as a result, that's why it's going higher. Let's see, man. If it can recover, it's trying. It was down 10%. Now it's down 3%. It's trying. It's trying to recover. It is trying. Chat says yes, they do. Yeah, dude, these companies are ridiculous. They don't put it up there. Amit should get Bloomberg Terminal. Dude, I'll get it eventually, but that shit's $25,000 a year. Twitter, honestly, is just as good as Bloomberg Terminal, if not better. Like Twitter, if you just search a ticker, it'll be up there because there's so many accounts posting. But sometimes you want some more information. Okay, let me see what else we have on Micron. Sales, we talked about that. Adjusted EPS for Q4, $1 to $1.16 versus $1.05. So they didn't definitively raise guidance, but they technically said we're going to do better than what the street expects, but it's not enough to get super excited. R&D expenses, $850 million. That's up 12% year over year. Yeah, they're down 3% now, working up a little bit. Adjusted operating expense, $976 million. That's up 13% year over year. That's lower than estimates of $1 billion. And R&D is a little bit higher than estimates, but only by $20 million. Cash flow, $2.4 billion versus $24 million year over year. Estimate was $3.24 billion, which isn't horrible either. Still down 4.7%. Oh boy. I thought we would get a beat and a raise, dude. I thought it would be more exciting. All right, so here's the actual numbers. Let's get to this. Let's see what they have to say.
Earnings are out, as we mentioned. We're ready with those numbers. Seema Modi has them. Seema?
And John, it's a beat on his top and bottom line. Earnings of 62 cents versus the estimate of 51. Guidance also coming in better than expected. Revenue guidance was roughly in line with estimates. We're watching the stock down by around 7% here in overtime. We have comments from CEO Sanjay Mehrotra talking about robust AI demand, strong execution, enabling Micron to drive 17% sequential revenue growth, exceeding the company's guidance range in fiscal Q3. We are gaining share in high margin products like high bandwidth memory, and our data center SSD revenue hit a record high. So very bullish comments here. But the question is, was it expectations were so high going into this report, John, with the stock up over 60% this year? Does these numbers meet those expectations? Back to you.
All right, Seema, thanks. Victoria, go to you on this one. The guide just being in line, maybe that disappointed some people, but the stock is off its lows, and over time it was down nearly 10%. Now it's more in the 5.5 range.
Yeah, for a tech stock, I think in line is the new miss, right? If it's not a beat and raise, that's been kind of the death knell, and we've seen a lot of overreactions.
Now it's down 7%.
Reactions to misses, and you're seeing it claw back a little bit as people kind of digest the news here. We have to remember the stock isn't Nvidia; it's a different part of the chip market, more like an Intel. And you're coming back, and if we see that bottom in PCs, we see AI PCs driving more. We see more data centers, and they're going to get the lift that they need. But obviously, if you're not going to raise guidance and you're up 70%, market's going to get a little bit wary about what they're paying for and how much growth. Again, this is a company struggling to come back to free cash flow. I'm hoping for commentary maybe on resuming share buybacks. What their capex is going to be. Their capex came in a little high last time. And so I think all of those factors come into how much growth and revenue and profit margin growth specifically are we going to see in the back half of this year.
All right, so I got the deck. 6.8 billion. Stock's still down 8%. I mean, look, 7.3%. She makes a good point. This thing's up 70% year to date. If you're not going to raise guidance when you're up 70%, you're not going to pull an Nvidia. yeah, the street's going to struggle a little bit to get super excited. So revenue's up 17% quarter over quarter, 82% year over year. Again, pretty incredible numbers, just not the guidance the street wanted. Then they break up their sections of DRAM, which is one of their memory products, and then NAND, 2.1 billion, DRAM 4.7 billion. Revenue by business units. So that again is up 85% year over year. Net income, 702 million. Okay, so last quarter they actually put up a little bit more, but still 702 million, not bad. Gross margin, 28%. That's incredible. 5.5 billion returned to shareholders from share repurchases and dividends over the past 2 years, including 4.1 billion used to repurchase 60 million shares. Yeah, they're doing all the right things. It's not like they're doing the wrong things. It's just the guidance is not as incredible as what the street wanted. And that's, that's the reason it's down. That's it. There you go. We got Sanjay Malhotra. So we got a Brown running the company, another Brown responsible for making sure the fucking him, Satya, what's the other dude? Sundar. They're all responsible to make sure that the Browns are responsible making sure this damn economy does not go to shit over the next few years. Micron now down 7%. Honest is up 2%. Nvidia is down 1.27. ARM is down 1.29. Let's go to the semis, actually. Yeah, look at that. Everything's red after hours. Everything's red. Nvidia is down. AMD is down. SMCI is down. Intel's down. ASML. We have to add Dell to this list. Dell is basically a semi company now. Dell is down about 1%. Lam Research down 2%. Where's Broadcom? Yeah, Broadcom down about 0.81%. Oh boy. Dude, this is the hard part about betting on earnings. I was even thinking for a second, man, maybe I just buy 10 shares. Like, it's going to do well. Nvidia's doing well. And then I didn't do it because I was just like, well, I don't know anything about Micron. I was like, I have no idea what they do. I know a little bit, but not enough to feel convicted enough to actually buy the stock. I have a couple friends where I was texting last night and they were pretty bullish on Micron. And so I was trying to get some intel from them, but they didn't say anything that was exciting enough for me to be like, all right, I'm going to get into this, even if it's for like a small play. Down 6%. And this is what happens, dude. Sometimes you're expecting it to go green and it just goes red. Sometimes you want to go and then you got to stop. You get it? Traffic light, red, green. That was good. That was fucking good. That was a good one. All right. So where's Rivian after the bell? How's Rivian taking this news? Rivian gave back some of its gains at 1469, still up 20% year to date. It was at 17 at one point, then fell back down to 15, got back to 1640, then fell back down. Wedbush, Dan Ives, he upgraded them to 20. We'll listen to him in a second. He said $20 on Rivian is reasonable, but Rivian did give back some of the gains later today. Any chance the rest of the market is red due to Bolivia? What the hell's going on in Bolivia? There's a coup happening in Bolivia? You guys should be so proud of me I didn't say coup. You guys should be so proud of me I didn't say coup. I have some culture, okay? I said coup, not coup. All right? But why is there a coup going on in Bolivia? Okay, what is going on? Hold on. Let's see what the hell is going on in Bolivia, bro. A coup in Bolivia? Coup Bolivia? A coup is when people overthrow their government, if I'm not wrong. Bolivia's president says irregular military deployment underway in capital, raising coup fears. Bolivian President Luis Arce warned Wednesday that an irregular deployment of troops was taking place in the capital, raising concerns that a potential coup was underway. He called for democracy to be respected on his X account. Okay, let's go to his X account. Bolivia, huh? That's kind of random. I did not expect that. I mean, that could definitely send the market red. Yeah, he said, we denounced the irregular mobilizations of some units of the Bolivian army. Democracy must be respected. Oh, wow. This is not good. Where's Palantir? Is Palantir down on the Micron? Palantir. Wow, Palantir goes. Well, Palantir was struggling the whole day, but that's below 24. Okay, so let's see what else. He called for democracy to be respected. He denounced the movement of military in the Murillo Square. Yeah, that's all the updates we have right now. What is the GDP of Bolivia? GDP of Bolivia. I would imagine it's not huge, but It's still a decent. It's about 44 billion as of 2022. Okay, so obviously not the largest country in the world, but still, that's not good news. Oh boy. All right, so we got some geopolitical stuff going on. Amazon right here, 193, robbing it up a little bit after hours, 2232 on the day. S&P 545. Amazon holding its gains, which is not too bad. Bitcoin 60,781. That's falling a little bit, and then Micron. You know, honestly, Micron falling 7% isn't the craziest, because if there are people that believe in the story, and the fact is that the company's growing 82% year over year, they're going to buy the dip. I don't think they're going to let Micron fall into the hundreds unless we see a more broader sell-off. Just given the fact that they crushed earnings, they didn't crush guidance, but I don't know if that's a reason to get scared. It's kind of like Shopify, right? Shopify ran up to almost $80, and then they corrected 20%, even though they had great earnings, to 52, and then it ran back to 65 because like it's an amazing company, just like Micron. It just got a bit up there in valuation, and so that's why it came down. Let's see if we can get some more Bolivia coverage. Let me see if I can pull some stuff up there. No, CNN and Fox are covering the debate. I will be covering the debate as well after the after tomorrow at 8 p.m. So we will have a live debate party. I'm going to see if I can get some people with me on that one. And the debate's going to be important, but this Bolivia news is also important. Yeah, no one, CNN's talking about the debate. All right, we'll get back to Micron, and then I'll try to get some Bolivia coverage in a little bit. Here we go. Here's Micron. And then, oh yeah, we have the call in 15 minutes. We're going to listen to the call in 15 minutes.
According to plan, if you believe in the overall semiconductor trade and Micron's place in it, I mean, a lot of memory necessary for AI to work correctly, that you believe in this company, or is there cause to step back based on what the valuation's been?
Yeah, listen, I think as far as kind of the move we've seen, obviously, in the stock price, not to mention across all of semis, typically you do see kind of these mid-cycle type corrections that take place where you almost have to see the stock price actually kind of catch up with some of the fundamentals out there. And maybe that's what you're seeing at this moment in time for Micron. That said, I think what was really impressive was kind of the beat that we saw on the data center side of things, kind of the tone that they're striking on the data center side of things. Clearly, there is a multi-year kind of upcycle that's going to be driven by high bandwidth memory out there. That is a higher value, higher price offering out there. And you kind of saw that they again alluded to the fact that they are largely kind of sold out through the end of next year. So that's going to also help the kind of the pricing landscape, we think, for Micron going into 2025. So as far as kind of the drivers are concerned, if you are a bull on Micron, there's really nothing in this report that kind of changes that outside of the stock move at this point in time.
Angelo, though, I do wonder, I mean, there's so many expectations baked into the broader AI trade. Look no further than all the moves we've seen in Nvidia. Company becomes the most valuable company in the history of the world last week and then takes a breather. We've seen some pretty outsized moves just in that stock alone in recent days here coming into the end of the quarter. I mean, have we gotten too far ahead of ourselves from an investing standpoint, from a fundamental standpoint, looking to forward guidance standpoint, or is the growth just so fast, whether it's Nvidia, whether it's Micron, whether it's others, that nobody can truly wrap their arms around it?
I think when you kind of look at the total addressable market opportunity for AI out there, specifically as far as semis are concerned, I think I don't think anyone's got any idea of how big this potentially can be, and we think the potential market, size of kind of whether it be Micron, whether it be Nvidia, or other kind of key memory, compute, or networking plays on the semi side of things, we think has a lot more room to run. But that said, you kind of look. I think you have to look at this on a case-by-case basis. In terms of Micron, I think as far as the fundamentals are concerned, they're kind of picking up steam later in the game than Nvidia is, and we think that you're going to see a more pronounced inflection as you go into calendar 2025. You also look at the valuation of Micron based on our calendar 2025 estimate, only trading at above 11 to 12 times next year's estimate. So it's probably the cheapest way to play AI right now. But that said, again, I mean, this is more of a commoditized type of.
He is right. Memory is commoditized. He's not wrong about that at all. It's just if they had raised guidance a little higher, that's what the bulls were expecting. Micron would have done better. But it has become cheaper than it was before, now at 132 versus at 145. Almost at like 148 the other day as well. Okay, we have an update on this Bolivia news stuff. Thank you, Sticky Monkey, for sending this to me on Twitter. So here's a little bit of Bolivian news on this.
Indicaba nuevamente el vehículo está entrando esta tanqueta prácticamente a Casa Grande.
I'm going to turn the audio off because I have no idea what they're saying. But a military coup appears to be underway in the South American country of Bolivia as elements of the army have gathered in the administrative capital of La Paz, while soldiers have now broken through the main gate of the home of President Luis Arce. Is the president like a bad dude? Why are they cooing this guy? Like, is he like a dictator or something? Is he like a communist, or is Bolivia a democracy? Is Bolivia a democracy? Bolivia is a democracy. We're credible. Okay, so it's not a perfect democracy, but it is. They've had some violence via their elections over the past few years. It was a democracy. Oh boy. Are they more socialist than capitalist? Is Bolivia socialist? Bolivia's movement towards socialism has defied right-wing predictions. Okay, so it seems more socialist than capitalist. Huh. 20 years socialist government. Huh. Interesting. All right. Well, that's not the best news geopolitically. Granted, I don't know how much impact it's going to have on the broader market. I'm speaking out of my ass here because I have no idea about the information. But if it has been socialist for 20 years, again, I could be totally wrong on this. Maybe there's a bit of a revolt happening because they're tired of some of the failed policies of socialism in the country. Again, I could be totally wrong, but that's just one reason maybe that we're seeing some of revolt, or there might be some other internal politics that I don't know about that's happening there as well. Jensen Huang just sold another 240,000 shares of Nvidia. Again, this is part of a 10b5-1 plan. All of this is scheduled. A lot of people are upset that he's selling so much, but this is scheduled sales. Like, he did not decide at all-time highs at 124 to start selling. It was scheduled. So, like, if the stock was $80 right now, he would be selling as well. I think it's still less than 1% of his shares. He brought in 30 million from this. He's going to have to pay probably 15 to the government. So Jensen did sell some more shares here today. Bolivia didn't use Palantir. Oh my gosh. Oh boy. Jensen Huang sells less than 0.1% and gets 30 million. That's crazy, right? That's how valuable the stock is. I think his net worth is like 85 billion now or something. It's kind of crazy, dude. $85 billion. Do you imagine being worth 85 billion? That's a lot of money, bro. His net worth must go up and down so much every day. It's just, I mean, all of us in the chat probably go up or down, 10. Some of the larger whales in the chat, probably $100,000 a day. I mean, my portfolio definitely fluctuates 10,000 plus a day, you could say. I'm sure a lot of people in the chat have much more than that. And, we probably are just like, damn, it goes up and down, up and down. We're kind of used to it. Imagine your net worth going up a couple billion every day to the downside or to the upside. That makes him the richest man. No, Bezos and Elon are still richer. That's crazy, bro. That's so freaking crazy. Nvidia market cap stock trading like a shitcoin this week. Oh my God. All right. Micron's down 7%. We got the call in 7 minutes. We'll listen to them in 7 minutes and see if they can save this earnings, even though it wasn't a bad earnings, dude. It's just the expectations were up there. ARM's down, DNA. Oh, by the way, Ginkgo, let me show you guys what Jason Kelly said, the CEO of Ginkgo. I thought this was interesting. So Kathy sold like another 30 million shares yesterday. She's probably liquidating the entire position. Jason Kelly actually responded. Someone called him a ZERP era, zero interest rate phenomena company. And he actually put up some Twitter fingers, which means he fought back a little bit. And he said, no, ARK and Kathy are great for the market. We need people that invest in long-term growth rather than just in long-term value or short-term growth in public markets. And they are the flag bearer for that. Capital markets are where a lot of our funding for hard tech comes from in the US, and in low rates, only in the true long-term funds stay with backing long-term breakthrough tech. They are richly rewarded when it works out, but the technologist in me wants to see more funds like ARK out there. So I'm a booster, but we are working like hell to make biology easier to engineer. And if we pull off that at scale, then people will definitely regret selling. All of this is bullshit. And the reason all of this is bullshit is because you, Mr. Jason Kelly, did not have to take the company public at 15 billion when you knew that was a ridiculous overvaluation for the company. It's like startups that raise money at like you know, you're in Series A, you got through pre-seed, you got through seed, someone gives you a term sheet for $200 million. You're doing, this was happening in 2021, $1 million in ARR. You're trading at 200x ARR. Some SaaS companies, by the way, are only trading at 10x ARR. If you look at GitLab, that's one of those. So if you accept that term sheet, you are saying we will be worth more than 200 million because the investor that's paying 200 million at a 200 million valuation, they believe that you'll be worth more. I invested in Figure, that private company, at a $2 billion valuation. And they were at I think like 70 million Series A. So they jumped up from Series A to Series B by a lot, but I believe they'll be worth more than 2 billion. If they're not worth more than 2 billion, I lose my money. So Jason Kelly IPOing the company or SPACing the company at 15 billion, knowing damn well Ginkgo was not worth 15 billion. That absolutely is a zero interest rate phenomena. That is someone who, with all his insider selling, cashed out at the expense of retail and Kathy. He cashed out at the expense of Kathy. And he says, oh, we need more funds like ARK to be long-term. Guess what? They can't be long-term when your stock goes below $1. And that's why Kathy's selling the position. So I think this is a nice little statement he tried to make, but unfortunately, the economics of this doesn't make any sense. It's not that Ginkgo couldn't be a successful public company. It's the valuation never made sense. And they obviously didn't have the growth to justify the valuation as rates came up. But instead of readjusting that, I mean, they just ended up selling the stock. And that's the sad part about how the Ginkgo story ended up playing out. So there you go. That's what happened with the Ginkgo. Why is Micron down so much? They didn't raise enough of their guidance. We got the call in 4 minutes. We'll take a look at that. And that's why they are currently down. Palantir at 2404. So Palantir recovering over 24. Now, I will have a video today, probably in about like 3 hours, of Shyam Sankar. He had a really good keynote presentation today. Loved it. It was very good. And I'm going to be recapping what the presentation was about, why it was important. At the end of the call, or at the end of the presentation, he actually cursed, which was great. I love when someone commented, I hate when like C-suites curse. I'm like, dude, I love when C-suites curse. Like that shows me they actually give a fuck. That's why I always love when Karp cursed during earnings calls. Like when he said the product's really fucking cool, I was just like, yeah, he actually believes we're really cool. He said, you need alpha, not beta. You need software that's going to make you more different, not similar to the same shit that doesn't work. I thought it was a good moment. I thought it was a really good moment. Do you think the call in a couple of minutes could save Micron a little bit? Thank you, MD, for the $5 super chat. I think if they can speak to why guidance was low, then yes. If they don't have an answer for why guidance was low, which the answer is that they're a commoditized industry and that, you know, their market share is being split among other people. The reason Nvidia doesn't have that problem is because no one's competing with Nvidia. Then they're probably not going to be able to resolve that concern. Now, granted, if they continue to grow the way they're growing and they fall to 125, 130, I think people will buy the dip. It's just saving the call in the short term, given they don't have an exact answer to that guidance question. Probably not. Probably not. They're not going to save this after hours action if that happens. So we'll see. Does anyone know if Amit plans on playing the MU call? I am not. I'm not playing MU at all. I just don't understand enough about the company to really get excited about it. Micron falls when the CEO. Does the CEO have an Indian accent? I'm curious now. Does he? I can make fun of the accents. Okay, I'm Indian. I'm allowed to do this. Not racist. So we got to see if he has a. Usually an Indian accent helps, in my opinion. I think it makes people be like, oh, this guy is definitely motivated. He cares. So we'll see. Amit, I just realized you have the most noticeable Adam's apple. You are not a woman. You know, my Adam's apple came in 7th grade, and that's when my voice went from like a hyena to like a deep, you know, it became a deep voice. And my mom couldn't believe it. Got Micron in about 2 minutes. My mom, like, she saw I don't think my mom knew what an Adam's apple was, and she saw it one day. She was like, what is that? Why is there a ball in your throat? And I was like, I don't know, but like I'm becoming an adult, I guess. So yeah, I do have a pretty thick Adam's apple. I don't have a ball in my throat because of what Andrew Tate said. Okay. I know a lot of you guys are already running with that joke. That's not the case. It's just, my voice is pretty deep, dude. Also, when I wake up in the morning at like 5 a.m., like, you know, when you have that like deep voice in the morning, I also have a pretty deep voice in the morning as well. So yeah. All right. I guess we'll have to see what Micron says in like a minute. We should see what happens. Too much hawk to it. Yo, we need that Sanjay dude. We need whatever the CEO's name. He needs to hawk Tua on the. Also, by the way, you guys know there's an extended video of it. I don't think you guys know there's an extended video, bro. There's an extended video of the hawk Tua girl. I'm gonna play. It's like 10 seconds. Let me play it real quick. There's an extended video, bro. This is crazy.
Demonstrate.
Hawk toots.
No, like,
Spit on it.
Demonstrate.
Hawk toots. Spit
No,
on
like,
it. Spit on it.
Dude, she's great. She signed with a talent agency, and she's officially taking advantage of this whole thing. I think I don't know if she officially got fired from being a kindergarten teacher or whatever, but she signed with a talent agency, and it looks like we're going to get a lot of merchandise from her. Yeah, she signed with UTA. That's the famous Hollywood talent agency. I like it. Only in America can you take advantage of capitalism by saying 2 words, Hawk Tua, and become an international sensation. I mean, it's absolutely incredible, and I wish the best for her. I really hope that she takes off from this. I really hope so. Okay, so call's not starting yet. Should be in a minute. MD, thank you again for the $5 super chat. You don't have to send these, man. Thank you so much. My calls are effed LMAO, but maybe I can pull something out of my ass tomorrow. Well, let's see. Let's see how it reacts. What was the strike and expiration as well for the calls? Because if it's short term, then yeah, it might get hit. But let's see what the CEO can say on the call and what they can do.
Session to ask.
All right, we're starting. Here we go. Here's Micron.
11 on your telephone. If your question has been answered and you'd like to remove yourself from the queue, simply press star 11 again. As a reminder, today's program is being recorded. And now I'd like to introduce your host for today's program, Satya Kumar, Investor Relations. Please go ahead, sir.
Thank you, and welcome to Micron Technology's fiscal third quarter 2024 financial conference call. On the call with me today are Sanjay Mehrotra, our President and CEO, and Mark Murphy, our CFO. Today's call is being webcast from our investor relations site at investors.micron.com, including audio and slides. In addition, the press release detailing our quarterly results has been posted on the website, along with the prepared remarks for this call. Today's discussion of financial results is presented on a non-GAAP financial basis, unless otherwise specified. A reconciliation of GAAP to non-GAAP financial measures can be found on our website. We encourage you to visit our website at micron.com throughout the quarter for the most current information on the company, including information on financial conferences that we may be attending. You can also follow us on X at Micron Tech. As a reminder, the matters we are discussing today include forward-looking statements regarding market demand and supply, market and pricing trends and drivers, the impact of new technologies such as AI, product ramp plans and market position, our expected results and guidance, and other matters. These forward-looking statements are subject to risks and uncertainties that may cause actual results to differ materially from statements made today. We refer you to the documents we filed with the SEC, including our most recent Form 10-Q and the upcoming 10-Q, for a discussion of risks that may affect our future results. Although we believe that the expectations reflected in the forward-looking statements are reasonable, we cannot guarantee future results, levels of activity, performance, or achievements. We are under no duty to update any of the forward-looking statements to conform these statements to actual results. With that, let me turn the call over to Sanjay.
Thank you, Satya. Good afternoon, everyone. I'm pleased to report that Micron delivered fiscal Q3 revenue, gross margin, and EPS all above the high end of guidance ranges. Micron drove robust price increases as industry supply-demand conditions continued to improve. This improved pricing, combined with our strengthening product mix, resulted in increased profitability across all our end markets. In data center, rapidly growing AI demand enabled us to grow our revenue by over 50% on a sequential basis, and we grew share in high-margin AI-related product categories such as HBM, high-capacity DIMMs, and data center SSDs. Our mix of data center revenue is on track to reach record levels in fiscal 2024 and to grow significantly from there in fiscal 2025. Robust AI-driven demand for data center products is causing tightness on our leading-edge nodes. Consequently, we expect continued price increases throughout calendar 2024, despite only steady near-term demand in PCs and smartphones. As we look ahead to 2025, demand for AI PCs and AI smartphones and continued growth of AI in the data center create a favorable setup that gives us confidence that we can deliver a substantial revenue record in fiscal 2025 with significantly improved profitability underpinned by our ongoing portfolio shift to higher margin products. Micron is ramping the industry's most advanced technology nodes in both DRAM and NAND. Over 80% of our DRAM bit production is now on leading edge 1 alpha and 1 beta nodes. Over 90% of our NAND bit production is on our 2 leading edge NAND nodes. 1 gamma DRAM pilot production using extreme ultraviolet lithography is progressing well, and we are on track for volume production in calendar 2025. Our next generation NAND node is on track with high volume production planned for calendar 2025. We experienced some operational disruptions after the recent Taiwan earthquake, but were able to recover quickly thanks to diligent efforts from Micron Taiwan team members working together with our global operations teams. Despite impacts from the earthquake, we now expect our fiscal 2024 DRAM front-end cost reductions, excluding HBM, to be in the high single-digit percentage range. We expect our fiscal 2024 NAND front-end cost reductions to be in the low teens percentage range. These cost reductions are supported by our industry-leading 1 beta DRAM and 232-layer NAND nodes. During the quarter, Micron signed a non-binding preliminary memorandum of terms, or PMT, with the U.S. government for $6.1 billion in grants under the CHIPS and Science Act. These grants support our planned leading-edge memory manufacturing expansion in Idaho and New York. Federal and state incentives, projected power cost advantages, and R&D co-location synergies will enable Micron to achieve cost-competitive, leading-edge memory manufacturing in the United States when these projects reach efficient manufacturing scale. Fab construction in Idaho is underway, and we are working diligently to complete the regulatory and permitting processes in New York. This additional leading-edge greenfield capacity, along with continued technology transition investments in our Asia facilities, is required to meet long-term demand in the second half of this decade and beyond. These investments support our objective to maintain our current bit share over time and to grow our memory bit supply in line with long-term industry bit demand. Micron retains flexibility under the PMT to manage construction and timing of supply growth in a manner that allows us to remain responsive to market conditions. Now turning to our end markets. We are in the early innings of a multi-year race to enable artificial general intelligence, or AGI, which will revolutionize all aspects of life. Enabling AGI will require training ever-increasing model sizes with trillions of parameters and sophisticated servers for inferencing. AI will also permeate to the edge via AI PCs and AI smartphones, as well as smart automobiles and intelligent industrial systems. These trends will drive significant growth in the demand for DRAM and NAND, and we believe that Micron will be one of the biggest beneficiaries in the semiconductor industry of the multi-year growth opportunity driven by AI. Most data center customer inventories have normalized, and demand from customers continues to strengthen. PC and smartphone customers have built additional inventories due to the rising price trajectory, the anticipated growth in AI PCs and AI smartphones, as well as the expectation of tight supply as an increasing portion of DRAM and NAND output is dedicated to meeting growing data center demand. Due to expectations for continued leading-edge node tightness, we are seeing increased interest from many customers across market segments to secure 2025 long-term agreements ahead of their typical schedule. In data center, industry server unit shipments are expected to grow in the mid to high single digits in calendar 2024, driven by strong growth for AI servers and the return to modest growth for traditional servers. Micron is well positioned with our portfolio of HBM, D5, LP5, high-capacity DIMM, CXL, and data center SSD products. Recently, our customers have announced their long-term AI server product roadmaps with an annual cadence of new products with significantly improved capabilities for the next several years. Micron's technology and product leadership puts us in an excellent position to support this growth. Customers continue to provide feedback that our HBM3E solution has 30% lower power consumption compared to competitors' solutions. Our HBM shipment ramp began in fiscal Q3, and we generated over $100 million in HBM3E revenue in the quarter, at margins accretive to DRAM and overall company margins. We expect to generate several hundred million dollars of revenue from HBM in fiscal 2024 and multiple billions of dollars in revenue from HBM in fiscal 2025. We expect to achieve HBM market share commensurate with our overall DRAM market share sometime in calendar 2025. Our HBM is sold out for calendar 2024 and 2025, with pricing already contracted for the overwhelming majority of our 2025 supply. We are making significant strides towards expanding our HBM customer base in calendar 2025 as we design in our industry-leading HBM technology with major HBM customers. We have sampled our 12-high HBM3E product and expect to ramp it into high-volume production in calendar 2025 and increase in mix throughout 2025. We have a robust roadmap for HBM and are confident we will maintain our technology leadership with HBM4 and HBM4E. Our next generations of HBM will provide further performance and capacity enhancements while we continue to evolve our industry-leading low-power innovations. We achieved full validation on our 1-beta 32-gigabit monolithic die-based 128-gigabyte high-capacity server DIMM products and are on track to achieve several $100 million of revenue from high-capacity DIMMs in the second half of fiscal 2024. Additionally, we continue to see strong interest in our industry-leading 1-beta LP DRAM in data center applications. Data center SSD is in the midst of a strong demand recovery as customers have worked through their 2023 inventory. Hyperscale demand is improving, driven primarily by AI training and inference infrastructure, and supplemented by the start of a recovery of traditional compute and storage infrastructure demand. Micron is gaining share in data center SSDs as we reach new revenue and market share records in this important product category. During the quarter, we more than tripled bit shipments of our 232-layer-based 6500 30-terabyte SSDs, which offer best-in-class performance, reliability, and endurance for AI data lake applications. We continued our leadership and innovation by becoming the first NAND vendor to supply 200-plus layer QLC for the enterprise storage market. In PC, unit volumes remain on track to grow in the low single-digit range for calendar 2024. We are optimistic that the planned Windows 10 end-of-life in 2025, the launch of Windows 12, and the introduction of new generation of AI PCs will accelerate the PC replacement cycle starting in late calendar 2024. The PC replacement cycle should gather momentum through calendar 2025 as new AI applications are rolled out. During Computex in Taiwan, we saw several announcements of next-generation chipsets and AI PCs. These devices feature high-performance neural processing unit chipsets, and we expect these devices will have 40% to 80% more DRAM content than today's average PC. Microsoft's minimum system requirement for Copilot Plus PCs, such as the Surface Pro, is 16 gigabytes of DRAM. We expect next-generation AI PCs to make up a meaningful portion of total PC units in calendar 2025, growing each year until most PCs ultimately support next-generation AI PC specs. AI PCs are also likely to require higher performance and higher average capacity SSDs than traditional PCs, aligning well with our leading technology portfolio on our 232-layer NAND with our Performance 3500 SSD and our industry-leading value QLC 2500 NVMe SSDs. Turning to mobile, smartphone unit volumes in calendar 2024 remain on track to grow in the low to mid single-digit percentage range. Leading smartphone OEMs recently announced new AI capabilities, and we are optimistic that delivering high-quality AI experiences can accelerate the smartphone refresh cycle. Smartphones have tremendous potential for personalized AI capabilities that offer greater security and responsiveness when executed on device. Micron's leading LP5X is enabling the recent 12 GB and 16 GB AI phone releases at all Android Tier 1 customers, representing a 50% to 100% increase over last year's flagship models. Micron's leading mobile solutions provide the critical performance, capacity, and power efficiency needed to unlock AI capability. Our mobile DRAM and NAND solutions are now widely adopted in industry-leading flagship smartphones. In calendar Q1, we received recognition for being number one in quality by 5 of the world's leading smartphone OEMs. Qualifications are on track for our second generation 1-beta LP5X products, and we see broadening use of our 232-layer NAND, moving beyond flagship phones into high-capacity, high and mid-tier phones. Turning to auto and industrial, the automotive sector continued to experience robust demand for memory and storage, and Micron achieved a record quarter for automotive revenues. Car production volumes are returning to pre-pandemic levels, and broader adoption of intelligent digital cockpits and more advanced driver assistance capabilities are driving content growth. We anticipate further content growth as additional intelligence, including generative AI-based technologies, is adopted in vehicles. Micron continues to be a leader in automotive with high-quality and industry-first product introductions. In the fiscal third quarter, we launched the world's first multi-port Gen 4 NVMe SSD in support of next-generation centralized compute architectures. In industrial and retail consumer segments, which are a smaller part of our business, we are seeing some near-term demand uncertainty from our distribution partners and end customers. We remain confident in the long-term fundamentals and growth drivers of these businesses, especially with the increasing adoption of AI in a variety of applications. Now turning to our market outlook. We forecast calendar 2024 bit demand growth for the industry to be in the mid-teens percentage range for both DRAM and NAND. Over the medium term, we expect industry bit demand growth CAGRs of mid-teens in DRAM and high teens in NAND. Turning to supply, we expect calendar 2024 industry supply to be below demand for both DRAM and NAND. As discussed previously, the ramp of HBM production will constrain industry supply growth in non-HBM products. Industry-wide, HBM3E consumes approximately 3 times the wafer supply as D5 to produce a given number of bits in the same technology node. With increased performance and packaging complexity across the industry, we expect this trade ratio for HBM4 to be even higher than the trade ratio for HBM3E. We anticipate strong HBM demand due to AI, combined with increasing silicon intensity of the HBM roadmap, to contribute to tight supply conditions for DRAM across all end markets. As the memory industry is still recovering from the challenging environment in 2023, this tight supply environment will help drive the considerable improvements in profitability and ROI that are needed to enable the investments required to support future growth. Micron's bit supply growth in fiscal 2024 remains below our demand growth for both DRAM and NAND. Micron will continue to exercise supply and CapEx discipline and focus on improving profitability while maintaining our bit market share for DRAM and NAND. We continue to project we will end fiscal 2024 with low double-digit percentage less wafer capacity in both DRAM and NAND than our peak levels in fiscal 2022. We intend to use our existing inventory to drive a portion of the bit growth supporting our revenue in fiscal 2025 to enable a more optimized use of our CapEx investment. Micron's fiscal 2024 CapEx plan will be approximately $8 billion, and WFE spending will be down year on year in fiscal 2024. We expect to increase our capital spending materially next year, with CapEx around mid-30s % range of revenue for fiscal 2025, which will support HBM assembly and test equipment, fab and back-end facility construction, as well as technology transition investment to support demand growth. The construction CapEx in the planned Idaho and New York greenfield fabs in fiscal 2025 will be half or more of the expected increase in total CapEx. In fact, the growth in both greenfield fab construction and HBM CapEx investments is projected to make up the overwhelming majority of the year-over-year CapEx increase. These fab construction investments are necessary to support supply growth for the latter half of this decade. This Idaho fab will not contribute to meaningful bit supply until fiscal 2027, and the New York construction CapEx is not expected to contribute to bit supply growth until fiscal 2028 or later. The timing of future WFE spend in these fabs will be managed to align supply growth with expected demand growth. I will now turn it over to Mark for our financial results and outlook.
Thanks, Sanjay, and good afternoon, everyone. Micron delivered strong results in fiscal Q3 with revenue, gross margin, and EPS above the high end of the guidance ranges provided in our last earnings call. Improving market conditions and strong price and cost execution drove the financial outperformance. Total fiscal Q3 revenue was $6.8 billion, up 17% sequentially and up 82% year over year. Fiscal Q3 DRAM revenue was approximately $4.7 billion, representing 69% of total revenue. DRAM revenue increased 13% sequentially, with bit shipments declining in the mid-single-digit percentage range and prices increasing by approximately 20%. Fiscal Q3 NAND revenue was approximately $2.1 billion, representing 30% of Micron's total revenue. NAND revenue increased 32% sequentially, with bit shipments increasing in the high single-digit percentage range and prices increasing by approximately 20%. Now turning to revenue by business unit. Compute and networking business unit revenue is $2.6 billion, up 18% sequentially. DRAM data center revenue more than doubled year over year. Revenue for the mobile business unit was $1.6 billion, down 1% sequentially as a planned decline in volume was partially offset by improved pricing. Embedded business unit revenue is $1.3 billion, up 16% sequentially, driven by record revenue in automotive. Revenue for the storage business unit was $1.4 billion, up 50% sequentially, with growth across all end markets. We achieved record data center SSD revenue, which nearly doubled sequentially. The consolidated gross margin for fiscal Q3 was approximately 28%, up over 8 percentage points sequentially, driven primarily by higher pricing and helped by product mix and cost reductions. Excluding the effects of previously written down inventories on fiscal Q2 gross margin, the sequential improvement in fiscal Q3 would have been 15 percentage points. As a reminder, previously written down inventories had no impact on fiscal Q3 gross margin and will not affect our gross margin moving forward. Operating expenses in fiscal Q3 were $976 million, up $17 million quarter-over-quarter. Continued spend discipline and ongoing operational efficiencies helped deliver operating expenses at the low end of the guidance range. We generated operating income of $941 million in fiscal Q3, resulting in an operating margin of 14%, which was up 10 percentage points sequentially and up 53 percentage points from the year-ago quarter. Fiscal Q3 adjusted EBITDA was $2.9 billion, resulting in an EBITDA margin of 43%, up 6 percentage points sequentially and up 30 percentage points, or $2.4 billion, from the year-ago quarter. Fiscal Q3 taxes were $227 million, lower than expectations at the time of our guidance, driven by one-time discrete items. Non-GAAP diluted earnings per share in fiscal Q3 was 62 cents, compared to 42 cents in the prior quarter and a loss per share of $1.43 in the year-ago quarter. Fiscal Q3 non-GAAP EPS exceeded the high end of our guidance range by 10 cents, driven by better revenue and profitability. Turning to cash flows and capital spending, our operating cash flows were $2.5 billion in fiscal Q3, representing 36% of revenue. Capital expenditures were $2.1 billion during the quarter, and we generated free cash flow of $425 million. Our fiscal Q3 ending inventory was $8.5 billion, or 155 days, a decline of 5 days from the prior quarter. Our leading edge supply continues to be very tight for both DRAM and NAND. On the balance sheet, we held $9.2 billion of cash and investments at quarter end and maintained near $12 billion of liquidity when including our untapped credit facility. Considering our ample liquidity, return to free cash flow generation, and strong outlook, during the quarter, we repaid $650 million of debt maturing in November 2025. We ended the quarter with $13.3 billion in total debt, low net leverage, and a weighted average maturity on our debt of 2031. Now turning to our outlook for the fiscal fourth quarter. We expect DRAM bit shipments to be flattish and NAND shipments to be up slightly in fiscal Q4. We forecast shipment growth to strengthen modestly in the November quarter. We project continued gross margin expansion. Pricing trends remain positive, supported by favorable supply-demand conditions. Portfolio mix will be an important contributor over time as HBM, high-capacity DIMMs, data center SSDs, and other high-value products increase as a portion of our mix. The high mix for our leading-edge nodes support front-end cost reductions in line with our long-term cost reduction CAGRs, excluding HBM on DRAM. Keep in mind that higher mix of HBM will offset non-HBM DRAM cost reductions, but HBM will be at accretive gross margins. We forecast operating expenses to increase sequentially in the fiscal fourth quarter due to an increase in R&D program expenses and a non-recurring Q3 asset sale gain contemplated in our Q3 guidance. We estimate fiscal Q4 tax expense of approximately $320 million. For fiscal 2025, we estimate our non-GAAP tax rate to be in the mid-teens % range. We project days of inventory outstanding to decline through fiscal 2025 and DIO to approach our target by the end of fiscal year 2025. We forecast capital expenditures to increase sequentially in the fiscal fourth quarter to approximately $3 billion. Despite this increase in CapEx, we project continued positive free cash flow in fiscal Q4. We expect full year fiscal 2024 CapEx of around $8 billion. Record revenue and significantly improved profitability in fiscal 2025 will help support average quarterly CapEx in fiscal 2025 to be meaningfully above the fiscal Q4 2024 level of $3 billion. We expect CapEx around mid-30s% range of revenue for fiscal 2025, which will support HBM assembly and test equipment, fab and back-end facility construction, as well as technology transition investment to support demand growth. As noted earlier, half or more of the expected CapEx increase in fiscal 2025 will be to support U.S. greenfield fab construction. As we have noted in the past, the CHIPS grants, ITC, and state incentives offset a significant portion of U.S. fab CapEx investments. Receipt of some of these incentive reimbursements occur well after when we incur the spend, resulting in higher CapEx for a period while we ramp our greenfield U.S. investments. Micron will remain disciplined in our capital spending and will modulate our WFE investments to grow bit supply in line with industry demand. With all these factors in mind, our non-GAAP guidance for the fiscal Q4 is as follows. We expect revenue to be $7.6 billion, plus or minus $200 million. Gross margin to be in the range of 34.5%, plus or minus 100 basis points. And operating expenses to be approximately $1.06 billion, plus or minus $15 million. We expect tax expenses of approximately $320 million. Based on a share count of approximately 1.1 billion shares, we expect EPS to be $1.08 per share, plus or minus 8 cents. In closing, market conditions are improving with price increases driven by favorable supply-demand trends and tightness on the leading edge. Micron is executing well on leveraging our technology leadership to grow our mix of high-value solutions, especially in products that support AI applications. Finally, our leading-edge investments and productivity initiatives are delivering cost downs and operating leverage during this market recovery. We expect record revenue and significantly better profitability in fiscal 2025 to support disciplined investment to maintain stable bit share and deliver free cash flow growth. I will now turn it back over to Sanjay.
Thank you, Mark. I want to close by commending our team in Taiwan for their response to the significant earthquake in fiscal Q3. In many ways, that response exemplifies Micron, an agile, prepared team that assesses and reacts quickly, supported by a brilliant network of colleagues around the globe. That collaboration, planning, discipline, and experience are precisely what ensures Micron is so well positioned today. I look forward to our teams accelerating Micron's memory and storage leadership as AI solutions present increasing opportunities to provide greater value from data centers to the edge. Thank you for joining us today. We will now open for questions.
Certainly. And one moment for our first question.
All right, here we go.
Our first question comes from the line of Krish Sankar from TD Cowen. Your question, please.
Yeah, hi, thanks for the question. I have two questions. Sanjay, the first one is on HBM. Clearly, you're gaining traction in HBM3E. I'm just curious how the HBM3E is and how is qualification going beyond one customer. Last time you publicly said that you qualified at Nvidia's H200. Kind of curious how is it going with the B100 for Nvidia. And also along the same path, your competitors spoke about pulling in the time frame for HBM4 versus the regular 18-month cadence for HBM technology transistors. So basically, I'm curious, Sanjay, any color on HBM3E yields, qual at different customers, timing of HBM4 would help. And I had a quick follow-up.
So let me start off by again pointing out that we delivered over $100 million in revenue in fiscal Q3 with our HBM3E. And I'm very pleased with our team's focus on this and delivering this number. And note that this was margin accretive to our overall margins, but also to our DRAM margins. And of course, we remain very much focused on delivering several $100 million in fiscal 2024 for HBM revenue. And as I noted, multiple billion dollars in revenue. And in HBM, we are very much focused on continuing to ramp our production and also to improve our yields. And that is, of course, an important priority. And any new product that is as complex as HBM or any new technology node always has a yield ramp, and the team is extremely focused on that. So as we look ahead to 2025, we remain confident in our ability to deliver our market share consistent with DRAM share sometime in 2025. And again, very pleased with Micron's strong product of HBM3E that, as I noted, has been well recognized by our customers to have 30% better power than any competitor's product that is out there. Now, regarding your question on qualifications, of course, we are in qualifications with other customers as well. And as I noted in my remarks, that in 2025 timeframe, we expect to be broadening, diversifying our customer base as well. And HBM4, I mentioned in my remarks that we have a strong roadmap ahead for HBM4 and HBM4E, and we feel very good about our capabilities there, the roadmap that we have in front of us, and our ability to deliver leadership with HBM4 and HBM4E as well.
Got it. Thanks, Sanjay, for that. And a quick follow-up on the NAND bit demand. You kind of mentioned that the demand bit growth is going to be in the high teens. If I remember right, last quarter, you said it's going to be in the low 20s. So I'm kind of curious, what was the delta versus last 3 months ago? Because there's a general view that AI should be helping NAND. So why is the NAND bit demand growth not going higher? Looks like it's going lower. Thank you.
So what I would tell you, Krish, is that there is really not much of a difference between the CAGR that we shared last time versus the CAGR we shared here. And I'll also tell you that we basically revised the base year for the CAGR that we used. So this time, the CAGR that we used the base year of 2023. And in 2023, as you know, we had a bit demand growth in NAND that was higher, meaningfully higher than the CAGR. So that, of course, the larger base of 2023 just, somewhat changed our outlook on the overall CAGR. But you're absolutely right to note, as we have also highlighted, that, data center SSDs are a good growth demand driver. And I'll just provide you some color. The data center, automotive, and industrial, these are all growing faster in terms of NAND demand versus the CAGR that we have shared. Client, mobile, and consumer, somewhat slower. But these slow-growing segments actually have also average capacity increases ahead of them. As I gave you examples of AI PCs and AI smartphones driving content growth. And we have just conservatively planned for this, perhaps, and we will continue to assess the average capacity growth in smartphone and PCs in the times ahead. And it's important that the CAGR that we highlight here, this is what we use for our capacity planning. And we want to, of course, always remain disciplined with respect to our capacity planning and very much focusing on demand-supply balance and ROI.
Got it. Thanks so much, Sanjay. Very helpful. Thank you.
Thank you. And our next question comes from the line of Vivek Arya from Bank of America Securities. Your question, please.
Thanks for taking my question. Sanjay, you mentioned a 3x trade ratio of HBM to D5. What happens to this ratio as you go to higher stacks, 12 high or more? And on the other hand, what happens as you make yield improvements? Just overall, is 3x still the operative assumption for calendar 25? And just what are the puts and takes around this ratio?
Yeah, I mean, I think for HBM3E, 3x is, the operative guidance here, with respect to the trade ratio. And again, just keep in mind that this already accounts for, the larger die that exists with HBM3E, given its performance and packaging and overall product expectations, as well as of course, with the 8 die stack as well as the logic die in there, the mature yield expectations there as well. And as the yields will be ramping up for us, of course, we will be able to get the benefit on the lower cost as we go forward. But with mature yields, the trade ratio with HBM3E is about 3 times over the mature yields of D5 in the same technology node. And as you go up to HBM4, of course, the trade ratio, as we have said before, increases. It goes higher than 3. And, as you go up from 8 die stack to 12 die stack in HBM3E, of course, 12 die stack will have somewhat lower mature yields as well. That's just the nature of how, device yields work. But the operative guidance, I think, remains still 3x for HBM3E and greater than that for HBM4, inclusive of the assumption of mature yields.
Right.
And of course, our assumption of mature yields here is world-class mature yields.
Got it. And a quick follow-up, maybe for Mark. So, you're suggesting fiscal 25 could be a record in terms of sales. Why can't it be a record in terms of gross margins? What are the puts and takes of gross margins as we go into next year? So maybe give us some sense of what incremental margins can be. Let's say sales are up 5 billion or 10 billion year on year, just so we can level set our model from a gross margin perspective.
Good question.
Yeah, Vivek, we're happy to take that. We're not providing fiscal year 25 guidance yet. I can talk about some sequential improvements from here. Of course, we guided a 600 basis point increase gross margin guidance between third quarter and the guide and fourth. And that's driven by price, but also mix is beginning to become a more substantive factor in the sequential gross margin expansions. We see November quarter. We see gross margin expansion continuing up a few hundred basis points. Again, price is a factor, but also as a fourth quarter mix participating in or contributing to the increase, and that's the effect of HBM and high capacity DIMMs and other higher value products. We do expect through fiscal 25 for price to continue to increase, and we expect this favorable mix effect to continue to increase. You've seen very clearly in the third quarter and our fourth quarter guide the strength in data center, and we see that growth continuing. And then later in the year, we see replacement cycle for smartphone and PC, and then the associated content with AI picking up. So we expect that to, again, second half of the calendar year into early 25 for that to kick in. Then on the supply side, you've got just tight conditions. You've got structurally lower capacity in the industry. Inventories are trending down, which we believe ours will trend down through fiscal 25 to close to our target by the end of 25. And then just the HBM trade ratio, which Sanjay just commented on. And then, of course, I talked about in the sequential gross margin, the mix that we see in the business with our higher value products. which are, HBM, high capacity DIMMs, SSDs, which we've talked about. So the momentum is very strong. We've got technology leadership. We've got the best product position the company's ever had, and the manufacturing is operating very well. So well positioned for fiscal 25.
Thank you.
Thank you. And our next question comes from the line of Toshiya Hari from Goldman Sachs. Your question, please.
Hi, thank you so much for taking the question. I had two as well. The first one on HBM. I guess recently there have been a couple of reports about, you all having some yield issues. Based on your commentary, it didn't sound like you were having these issues, but just wanted to clarify that. If you could address that, that would be really helpful. And then on HBM, the second part is, so gross margins are accretive to overall corporate margins today. What are your thoughts on sort of the relative profitability going into the second half of the year and into calendar 25, particularly given the fact that you have pretty good visibility as it pertains to HBM pricing?
So regarding the yields, I think I already commented that we are pleased that in the very first quarter of production, we were able to ship over 100 million of HBM revenue, and we remain focused on our goals and remain confident about our goals of delivering several $100 million of revenue in fiscal 24 and multiple $100 billion of revenue in fiscal 25, and getting to our share to be in line with our share for HBM to be in line with our DRAM share sometime in 2025. So of course, our yield assumptions are baked in all of that, and we look to continue to work on all aspects of ramping up our capacity, and of course, we expect to improve yields as we go forward. Again, that is typical of any new technology, any new product that you ramp up. So that's what we remain focused on. And regarding the gross margin comment, maybe Mark can add some color, but as I mentioned earlier, the gross margin is accretive not only to our corporate margins, but it is also accretive to our DRAM margins. And our DRAM margins, as you know, tend to be higher than our corporate margins, which are lower because of the lower NAND margins in NAND generally in the industry.
It is helping to drive continued gross margin expansion through 25.
Okay, got it. That's helpful. And then as my follow-up, maybe one for Mark on CapEx. So you're guiding fiscal year 25 up materially. Given some of the hints that you've provided, maybe you're looking at a mid-teens $1 billion number for fiscal 25. I know more than half of that is coming from the greenfield investments in the U.S. But how should we be thinking about your bit supply growth in fiscal 25 or calendar 25? Should we expect you guys to grow, more or less in line with the demand CAGR you have for DRAM and NAND, mid-teens and high teens respectively, or do you expect to undership relative to those ranges in fiscal 25? Thank you.
Yeah, good questions, Toshiya, and yeah, your view on CapEx. We've given enough that we don't want to guide revenue for 25 because we'll do that at a future date by quarter. But we do expect a material increase year over year. For the quarter sequentially, we'll see a meaningful step up. We were at $3 billion. We increased from 2.1 to 3 billion third quarter to fourth quarter guide. I would characterize that both on a dollar and percent basis as more than meaningful. So it'd be less than that sequentially, but we are spending more. To your question on, we are very constrained on bit production, and so we will, as I mentioned in my earlier comments, we will certainly see inventory levels come down In fact, we expect to be approaching target inventory levels by the end of 2025.
Thank you.
Thank you. And our next question comes from the line of Thomas O'Malley from Barclays. Your question, please.
Hey, guys. Thanks for taking my question. This is for Sanjay or Mark. So you've given us the fiscal year 25 kind of company guidance of several billion in HBM. And then you've kind of talked about the share that you're getting to is equivalent to that of DRAM. So you kind of solve for that market, low teens, total HBM market. I just kind of want to understand, what's your view of the suppliers to that market? As it stands today, it seems like there's really two major suppliers. When you look at the out year, do you think that number changes if there's additional qualifications? Would that number change if you were to have a third qualification, aka the market be bigger? And how did you kind of come up with that total market number? Is that kind of a bottoms-up accelerator forecast? But just kind of how you're thinking about the market, and does that change, or is it contingent upon qualifications of some of your competitors?
Well, as we have said before, that we see the CAGR for HBM growth, in terms of bit growth CAGR, to be well above 50% over the next few years. So, certainly HBM is a strong growth driver. And again, as we increase our mix of HBM going forward, it will, of course, be, continuing to be accretive to our financial performance, including margins. And we are pleased that with the strong performance that we have, we are sold out for 25 as well, with overwhelming part of our output already committed in terms of pricing. So that points to a strong position that we have in terms of continuing to work toward achieving our goal of getting to our HBM market share to be in line with DRAM share sometime in 2025. And of course, we are working with broad range of customers in qualifications, and next year we plan to be shipping to broader set of customers. Having said all of that, no question that HBM is a complex product for our customers to qualify as well. It's highly resource intensive, not just for us, but for our customers as well. And this is where we think that our strong product position, highlighting again those attributes of 30% better power than nearest competitor and better performance and really high quality, here positions us well when customers work with those resource-intensive qualifications for Micron. And that's what we are already seeing in terms of our engagement. So we feel pretty good about our plans here for HBM.
Super helpful. And then just switching gears over to the NAND side of things. Obviously, you had a competitor out in the market talking about kind of run rate industry CapEx and kind of talking about the change in industry architecture, maybe not scaling as quickly or as capital intensively as you had in the past. You obviously are talking about CapEx. A lot of your CapEx next year is going towards Greenfield and HBM. Could you talk to the remainder of that CapEx? Could you give us any color on DRAM or NAND split between that? And then do you agree with, in this instance, it was Western Digital talking about capital intensity longer term on the NAND side. Do you agree that maybe structurally you'll see a lower investment threshold in the future to kind of continue to maintain what the industry needs?
So, for us, certainly our CapEx is dominated by our DRAM-related CapEx. That's, certainly HBM, because it's growing as mix in the industry, and HBM is capital intensive when it comes to unique clean room requirements for HBM, and in packaging and assembly, as well as, test equipment. So our CapEx is dominated by that, as well as to meet the future requirements in the second half of this decade, and that involves the construction of the fabs. So NAND CapEx is, certainly a much smaller portion of our total CapEx. And we have a very strong technology position with our NAND and strong portfolio that you see, and we are continuing to shift that portfolio toward higher value solutions as well. So we certainly will remain extremely disciplined when it comes to NAND as well in terms of driving the CapEx. And we will be disciplined in terms of driving our technology node transitions, in the timing of node transitions, across the industry. I think it is, certainly helpful given the bit growth that you get from those transitions to, slow down the timing of those, the cadence of those node transitions, so that, your bit growth CAGR versus the gain of bits that you get from the wafers can be managed well. These are the kind of things we are very much focused on in order to maintain a good supply discipline, maintain supply growth that is very much in line with the demand growth, and managing our CapEx here prudently. But yes, I mean, overall, our CapEx is in NAND is significantly smaller, but we remain extremely disciplined, focused on managing our supply growth in line with demand there. And again, I want to point out that with NAND, technology transitions are sufficient to meet the demand growth. We do not need the new clean room, the new greenfield fabs, the kind that are needed in DRAM. And HBM and the trade ratio of HBM with standard DRAM is a factor in the greenfield requirements only also.
Thank you. One moment for our next question. And our next question comes to the line of Christopher Danley from Citi. Your question, please.
Hey, thanks, guys. So I think you mentioned you're signing up some customers to long-term contracts. Given your belief that the pricing is going to keep going up, why sign people up to long-term contracts and potentially, miss out on some of the increased pricing? Or is there some potential for wiggle room on pricing with the contracts, and it's more of a unit basis? Just curious there.
Good question.
Well, the long-term contracts, really help us and customers get closer, not only with respect to, let's say, supply or pricing discussions as may be relevant to our various customer contracts, but also with respect to the technology roadmap, the product roadmap, the timing of the supply. And they are very helpful factors in building a close relationship with the customers. And you can see that, we are pointing to, a substantial revenue record in 2025, of course, leveraging some of these contracts that we have put in place. And we have also pointed to a significant improvement in profitability. So I think we are well positioned in these contracts with respect to not only the supply and demand fundamentals, but also with respect to the financial aspects.
Great. Thanks, Sanjay. And then just a quick one for Mark. Mark, was the Taiwan quake impact limited to the May quarter, or is it impacting the current quarter as well?
Not a material impact, Chris.
It was just May. All right, thanks.
Thank you. And our next question comes from the line of Harlan Sur from JP Morgan. Your question, please.
Yeah, good afternoon. Thanks for taking my question. Enterprise SSDs are seeing really strong demand pull from AI workloads, right? The team has driven significant share gains in enterprise SSD just over the past few quarters. I think in calendar Q1, I think Micron was the #3 global share leader in enterprise SSD. I think it's now about 20-25% of your overall NAND business. I mean, this is a position that we've never seen Micron in before. So I think first question is, are enterprise SSD gross margins accretive to your overall NAND gross margins? And then secondly, I saw your next-gen PCIe Gen 5 SSD demo at Nvidia's GTC conference. Pretty significant performance uplift on AI workloads versus your Gen 4 SSDs. So are you qualifying these next-gen Gen 5 SSDs for AI applications? When do you expect to ship? Just wanted to understand the sustainability of your strong share position here.
Well, thank you, Harlan, for recognizing the strong momentum that Micron's data center SSD have. And, certainly our data center SSDs are accretive to our overall NAND margins. And we have really great products. I already highlighted in my prepared remarks that we saw, tripling of bits that we shipped with our 232-layer NAND AI SSDs, going absolutely toward AI data center applications. And we have a broad set of customers that we are working with in terms of growing our share. So we see when we talk about, sequentially, we had, 50% increase in revenue for our data center products. Of course, that includes the benefit of our strong data center SSD roadmap. And yes, I mean, we will, of course, continue to work with our Gen 5 SSDs, in terms of working with customers for qualifying and, not prepared to discuss at this point specifics regarding timing of, some of the roadmap that is in front of us for shipments. So yes, in terms of sustainability of the strong improvement to share, we are definitely with our strong product portfolio counting on it. And this will, our SSD momentum, data center SSD momentum, will absolutely contribute also toward my remarks that I said that we will increase our mix of data center revenue in fiscal year 25 as well. Of course, HBM, high density DIMMs, these will, of course, be a big part of it, but also data center SSDs is going to be another big part of our growth in fiscal 2025 related to data center revenue.
I would just add, Harlan, that the storage business unit delivered operating profit in the quarter.
Oh, perfect. Thank you very much. Insightful.
Thank you. This does conclude the question and answer session as well as today's program. Thank you, ladies and gentlemen, for your participation. You may now disconnect. Good day.
Okay, cool. So that's it. That's the Micron call. We'll do about 10 minutes of breaking down some of this stuff after hours, and then I will get you guys out of here. Look, not a bad call. We're seeing it get back up there. It was down almost 10% at one point. The RSI on the daily fell to 6 when this bad boy fell to 127, which was kind of insane when it got there. It got to 127.37. Now, it lasted for a few seconds, but it did get there. And we clawed our way back up to 133. At one point, we got to 138.24, which, it got rejected right there. So not amazing, but still, we did get to those levels. And it's because, this was a good earnings, dude. This was a good earning. This was not a bad earnings. Revenue up 80% year over year. They beat on EPS. They're profitable, $700 million. They beat on their EPS, their revenue, and their full year guidance. So they beat on expectations of guidance. They just didn't increase it as much as the street wanted them to increase it by, which when the stock is up 72% year to date, obviously that's hard to do. I think this is going to end up like Shopify, dude. So, let's look at Micron right now. Micron currently year to date is up 72%. It was up like 80% before the 6% drop, right? So you got a stock that's already up a lot this year, having to put up lofty expectations. They didn't fully deliver on those expectations, although I think the nuances of this call, which we'll talk about in a second, shows that their expectations are likely going to be superseded. They just need some more time to get there. If we look at Shopify stock, Shopify year to date is down 11%. We ran all the way up to 90, then fell into this 77-ish range, topped out at 77. Then it collapsed. Google's not even showing it correctly, but it got to, I think it got to like 53, 54, but let's just say it got to 57 from 77, a nice 25% decline. And then it claws its way back up within a matter of a month back to 67, not at the levels it was at like 90 in February or even 77, but still getting back up there. Micron didn't even take that big of a hit. Micron fell from 142 to now it's at 133. It was at 127 for a second, now back at 133. I think there is an argument that the street buys the dip on this. And the main reason I think the street could buy the dip on this is primarily because of this statement they made during the earnings call, which is that their HBM, high bandwidth memory product, is sold out for 2025. They were sold out for a majority of 2025 a couple of weeks ago. Now they confirmed on this call they are sold out for the entirety of 2025 with pricing already contracted for the overwhelming majority of our 2025 supply. Now, I think that contracting on the pricing is very important because basically that says, hey, we did all the negotiations we needed to do with the people that are buying the product. We are supply constrained, which means we kind of told them, hey, you got to pay us this or we're just going to go to the next guy. And they were like, all right, fuck it. We're going to pay what you want. Let's just get the contract done so we can secure we're going to get the product. And that's why they were able to sell out of most of the product for fiscal year 2025 with the contracting, which means the margins that Micron wanted on that product. So the memory storage space is a commodity. I mean, there's a lot of different players here. Micron is one of the leaders, and the streets fear about that commoditization and the cyclicality of it, at least for the next year, seems to be not that important of a fear because the competition did not stop them from selling out of 2025. Again, selling out means they don't have any more product they can physically sell. They're done. They sold out of it, and they sold out likely at the prices they wanted to. And then B, it means that the demand is obviously there. So the cyclicality of it, maybe it starts taking into effect 2026, 2027, but not in 2025. Savici says it also hints that supply chain could be a hassle moving forward. Yes, so that is a bear case you have towards that, but I'd rather, I think every semiconductor investor would rather have supply be an issue versus demand. I mean, this also reminds me what happened to TSM. Do you guys remember TSM's dip on earnings? They fell to like 125. Let's go to 6 months. Yeah, right here. It was so stupid, dude. They were at 177. They fell to 125 April 19th because they said we have too much demand, not enough supply. And it doesn't take a rocket scientist to realize, okay, that's not a great problem, but it's a way better problem than not having enough demand. And obviously the demand kicked up, and TSM now rallied all the way to 186, now at 170, because their chips are the most important in the world. So Micron is not TSM in the same sense, but it is kind of the same story. And I think investors might end up buying the dip on that over the coming weeks. Not bad at all for Micron. So that was Micron's earnings. Let's look at actually after the bell where Nvidia went. So Nvidia fell right after Micron fell. Nvidia right now down 1.33%. So we're covering a little bit on Nvidia. It fell all the way after hours to 123. Now it's at 124.71. Palantir recovered again above 24. It was at 23.99 or 23.92. So not too bad below 24, but now above 24. And then the S&P at 544.68, down a little bit after hours, closed the day on 545.51. Not bad. Dude, it's not bad. I think the broader story here is that the AI narrative is not going anywhere. It is absolutely not going anywhere. I mean, you needed a catastrophic earnings from Micron to be able to say Nvidia is going to suck, demand's going away, yada, yada, yada. I don't think we got any of those numbers, any of those results. Why is Visa down 1.5% after hours? I don't know. Not sure about why Visa's down. I don't think they had earnings. Oh, Levi's, by the way, we didn't. Yeah, I'll look at Visa and try to see if I can get an answer, but that one's down. Levi's took a hit. They missed on EPS and they missed on revenue. They're down 12%. They fell from 24 to 18. Now they're back at 20. $9 billion market cap on Levi's. I want to go through their numbers, but it seems like they missed on EPS and revenue, and that's why they got hit as well after hours. And then finally, while we were watching the call, SpaceX wins an $850 million contract from NASA. Not bad for Elon either. I mean, look at that. SpaceX wins $843 million NASA contract to build the U.S. deorbit vehicle for the International Space Station. Reading a little bit from here, selecting U.S. deorbit vehicle for the ISS will help NASA and its international partners ensure a safe and responsible transition in low Earth orbit at the end of station operations. The single award contract has a potential value of $843 million. The launch service for the U.S. deorbit vehicle will be a future procurement, and they ended up giving the entire contract to SpaceX. SpaceX right now valued, I think, at $200 billion in the private markets. When you win billion-dollar contracts like this, tends to, and obviously the Elon effect, you tend to get a nice valuation. So $200 billion right there for Elon, another billion-dollar contract. Tesla stock after hours, I don't think it sold off aggressively on Micron. Sold off a little bit, down 0.47%. 196 closed, 195 for the day. And then where's Amazon? Is Amazon above 190 still? Amazon 193 after hours. That's really good for Amazon. It needed to close above 190. And that's what you got for Amazon. All right, cool. That's it for me. Thank you all for listening and watching. I'll have that Daily Pantry episode out in a couple hours about Shyam Sankar and his recent interview or keynote today. I thought it was a really good keynote. And so important to dissect that and discuss what he means in the context of American manufacturing and why he's so bullish on spreading this message out there. So we'll talk about that. And then we'll be live tomorrow for the market open. We have Nike after the bell tomorrow. Tomorrow's Thursday. So Nike will be an important check on the consumer. And then we'll keep going from there. All right. We'll see what happens to Micron over the coming days, but that wasn't a bad call at all. I think the questions, they had some good answers for them too. So now we'll just see how they play out from there. All right. Thank you, everybody. Have a good one. Love you all. We'll see you guys tomorrow, 8:45 a.m. Bye, everyone. Have a good one.